Hey there, fellow investors. Today we're diving into the world of value investing and exploring the habits that set the most successful investors apart. I'm excited to share with you 10 habits of highly successful value investors you can adopt today. These aren't just theoretical concepts. They're practical, actionable strategies that you can start implementing right away to boost your investment game. Let's kick things off with a solid introduction to value investing. At its core, value investing is about finding stocks that are trading below their intrinsic value. It's like being a savvy shopper in the stock market, always on the lookout for great companies at bargain prices. This approach was pioneered by Benjamin Graham and later popularized by Warren Buffett. Value investors don't just follow the crowd or chase the latest hot stock. Instead, they do their homework, analyzing companies thoroughly to understand their true worth. It's a strategy that requires patience, discipline, and a long-term perspective. Now, let's get into those 10 habits that can transform your approach to investing. Successful value investors aren't in it for quick profits. They understand that real wealth is built over time. When I first started investing, I was always looking for the next big thing, hoping to double my money overnight. But I quickly learned that this approach was more like gambling than investing. Now, I focus on companies with strong fundamentals that I believe will grow steadily over the years. It's less exciting in the short term, but it's proven to be much more rewarding in the long run. Financial statements are like a company's report card. They tell you how well a business is performing, how much debt it has, and how efficiently it's using its resources. I remember feeling overwhelmed when I first looked at a balance sheet, but with practice, it became second nature. Start by focusing on key metrics like revenue growth, profit margins, and debt levels. Over time, you'll develop a knack for spotting red flags and identifying promising opportunities. The stock market can be incredibly noisy, with prices fluctuating based on rumors, emotions, and short-term events. Successful value investors tune out this noise and focus on a company's intrinsic value, what it's really worth based on its assets, earnings potential, and competitive position. I've found that this approach helps me stay calm during market turbulence and make more rational investment decisions. Patience is a virtue in value investing. Sometimes, the best move is to do nothing and wait for the right opportunity to come along. I've learned to keep a watch list of great companies and wait for their stock prices to come down to attractive levels. It might mean sitting on cash for a while, but when the right opportunity presents itself, you'll be ready to act. This is a key principle of value investing. The idea is to buy stocks at a significant discount to their intrinsic value, providing a buffer against potential errors in your analysis or unexpected market downturns. I always aim for at least a 20% margin of safety in my investments. It's like buying a $100 bill for $80. Even if your estimate is a bit off, you're still likely to come out ahead. The business world is constantly evolving, and successful investors never stop learning. I make it a habit to read industry reports, follow business news, and even talk to employees and customers of companies I'm interested in. This ongoing education helps me spot trends and opportunities that others might miss. Emotions can be an investor's worst enemy. Fear can cause you to sell at the worst possible time, while greed can lead to risky bets. I've learned to stick to my investment thesis and not let short-term market movements sway my decisions. It's not always easy, but keeping emotions in check is crucial for long-term success. While it's important to stay informed about your investments, checking stock prices every 5 minutes can lead to unnecessary stress and poor decisions. I review my portfolio quarterly, reassessing each position based on the company's performance and any significant changes in the business landscape. This balanced approach keeps me informed without becoming obsessive. The stock market has a way of repeating itself, and there's a lot to be learned from past booms and busts. I've made it a habit to study market history and reflect on my own past mistakes. This has helped me avoid common pitfalls and make more informed decisions. Remember, the goal isn't to be perfect, but to keep improving over time. Market corrections and crashes can be great opportunities for value investors. By always keeping some cash on hand, you'll be ready to take advantage when prices fall. I typically aim to keep about 10 to 20% of my portfolio in cash, depending on market conditions. This dry powder has allowed me to pick up some great bargains during market downturns. These habits have served me well in my investing journey, and I'm confident they can do the same for you. Remember, becoming a successful value investor doesn't happen overnight. It takes time, patience, and consistent effort. But by adopting these habits and sticking to them, you'll be well on your way to building long-term wealth in the stock market. I hope you found this video helpful in your investing journey. If you did, please give it a thumbs up and consider subscribing to the channel for more investing insights. Don't forget to hit that notification bell so you never miss an upload. And I'd love to hear about your own investing experiences. Drop a comment below, and let's keep the conversation going. Until next time, happy investing.